we are okay. And think about it before. Let's look at this here. Let's look at the radar screen before I go to the dollar yen. We have a buying point which is 81.12, which is a structure point, structure long point, and it is also has been our stop. We have another structure point to the downside, which is the 80.24. So what happened last week is again a very nice setup. We traded the beginning of the week above 81.12, so that triggered our buy signal. Then it rolled over and it came back below the 81.12, so we took it short. It went all the way down towards the 80.24. It traded below the 80.24 and it put in a low of 80.45, and then it came back and it closed the week right above the structural point of the 80.24, similar, identical to the Aussie yen. Identical. It is sitting at the structure. Look at the intraday. That is our structure point. Okay, it went below it, it came back above it, and it came back and it settled at the structure point. So this now is our decision making point, and it becomes again another no-brainer trade. So in this case it is going to be exactly, I'm going to do exactly like what I did with the Aussie yen. So it's going to be the 80.24, and we're going to see how it works next week with both the Aussie yen and the dollar yen. Okay, and that's it. Again, be reasonable, use common sense, give it a few pips on either side of the structure. This game, when we are at the structural point, it is not who gets into this trade the fastest. You need to have a little bit of patience. It's not who's the fastest draw, it is the sharpest shooter, not the one the quickest gun. So make sure that it's already breaking, like here. Look here, for example, how many times it was pushing above the structure point and then finally broke. So the first test you want to be patient. The second test, maybe you want to take the second test, but make sure that it's breaking above the structure point. The same thing over here on either side, the long or the short. Okay, and that, guys, is the dollar yen. And with that,